Wyoming has gained a reputation as a tax-friendly state for businesses, particularly for limited liability companies. But what exactly makes Wyoming so attractive for LLCs, and what are the tax implications of forming one there? Let's explore the key aspects of Wyoming LLC taxes, filing requirements, and benefits. One of the most significant advantages of forming an LLC in Wyoming is the absence of state income tax. This means that neither the LLC itself nor its members are required to pay state income taxes on their business earnings, regardless of how much revenue they generate. This can result in substantial savings for business owners compared to states with income taxes. However, Wyoming LLCs are not entirely free from state-level obligations. They must file annual reports with the Secretary of State and pay an annual report fee. This fee is calculated based on the value of the LLC's assets in Wyoming. For most small businesses, the minimum fee is $50. LLCs with assets in Wyoming valued over $250,000 pay $0.0002 per dollar of assets. Wyoming's tax structure benefits various types of businesses. Holding companies, for instance, can take advantage of the state's tax exemption on intangible assets like stocks, bonds, and intellectual property. Out-of-state and online companies can also benefit from Wyoming's favorable tax climate, but they may need to establish a nexus in the state, often through a virtual office, to enjoy these advantages fully. For non-U.S. residents operating LLCs in Wyoming, the tax situation is similar to that of online businesses without a physical presence in the state. While they may not be subject to state taxes, they must still comply with federal tax laws and report any U.S.-sourced income. Speaking of federal taxes, Wyoming LLCs are still subject to federal tax obligations. Single-member LLCs are typically treated as disregarded entities for tax purposes, with income and expenses reported on the owner's personal tax return. Multi-member LLCs are usually taxed as partnerships, requiring a separate informational tax return. LLCs also have the option to elect to be taxed as corporations, if that better suits their business structure. Property taxes are another consideration for Wyoming LLCs that own real estate in the state. Residential and commercial properties are taxed at 9.5% of their assessed value, while industrial properties face a slightly higher rate of 11.5%. In conclusion, Wyoming offers significant tax advantages for LLCs, including no state income tax and exemptions on intangible assets. However, businesses must still meet annual filing requirements, pay federal taxes, and consider property tax obligations if applicable. By understanding these tax implications and requirements, business owners can make informed decisions about forming and operating an LLC in Wyoming, potentially saving money and simplifying their tax obligations in the process.